Hello and welcome to another technical analysis tutorial. In this tutorial, I'd like to talk about supply and demand areas, which is a critical concept or an important concept that I use for trading. These are a little bit different from just standard, resistance and support levels, whereas a demand zone would be a support level in a certain way, and a supply zone would be a resistance level. But they are a bit different. They are more significant. They are actually levels where turnarounds happen, and I want to talk a little bit more about that concept and how you can use it in trading. So when we take a look at supply and demand, what is it actually? So we can see, first of all, we're going to identify a demand area. A demand area on this chart is down here. So what is the demand area? Well, we can see that if you follow the mouse here, we were coming from up here, yeah. So we had we were starting to enter a downtrend, and then in this area here, something clearly happened. Something shifted between buyers and sellers, and suddenly the buyers started to kick in. The price couldn't be pushed further down. It was also a psychological level, the $1 level. And if we now draw that line here at the $1 level, the sentiment totally shifted in the market. Yes, there was another small attempt to push the price down, but we can clearly see here that after that, we moved to new highs. And this really is the concept of a demand area. Demand area basically means there is a lot of demand for that asset and at a certain range, yeah, in a certain area. And we can clearly see that here. We can identify it. And this is an area when you have such a strong shift in momentum and really like a turnaround area, then from the downside to the upside, that would be demand. Supply is the other way around. But it's different to, just a standard support or resistance or momentum shift. This is really a significant one that you can spot straight away when looking at a chart. You can clearly see that this was then also a meaningful area going forward, and we're going to come to that. So that's the concept for how you can use it in trading. If you define one of these demand areas and you identify them on your chart, then when the next time the price moves into this area, that would then be an opportunity to enter a trade. So let's just move forward. So we were all going up to this level, came down again into this level again. Yeah, several months later or a few months later, we came back into that area, and that is then normally an opportunity to enter a trade. In this case, for example, a long position. But what's very important, not to blindly enter that position. That is very important, not to blindly enter that position, because sometimes it just overshoots, it just goes through. So it is, however, an opportunity to enter a long trade in this moment. For example, what you could do, we're now on the 4-hour chart. You can also identify your demand areas on the daily. But then to enter, for example, a trade, you could go into the hourly chart or even the 30-minute chart and look for buying opportunities. For example, by identifying patterns, turnaround areas, and so on. Here you would have identified it easily, even on the 4-hour chart, with this doji candle, which normally indicates a trend reversal. Yeah, it can do at least. And especially when you have such a long wick to the downside, it just indicates that here the buyers were pushing already in, and the next candle then confirmed it, and it was quite a green candle. It was an engulfing candle as well, and we started to move up. So this is always, when you have something with a very long wick, that needs to get your attention. But that is one way of how you can use it for trading. And as you can see, whenever we entered that area again, for example here, we could have entered another long trade position, yeah, because it was again, that demand area was still present. So we had demand here, a lot of demand here. And again, later, we had another demand area here. So it is very important. It is a very important concept, and you can use it. And it works time and time again. Again, it's never guaranteed. Nothing works 100% of the time. Otherwise, it would be too easy. But these are demand areas, and supply works the other way around. When you identify a supply area, again, these are turnaround areas. On this chart here, we don't really have a significant, well, there is one, which is this one actually. I would consider that is a supply area. But as we can see, when we only touched that area once again, and it hasn't really done anything there. So in this case, that area was just we just went through that area, we went through that range, even though we had, as you can see here, a resistance area. It acted as resistance, but it wasn't like here where you had such a significant demand then, and that happened time and time again. But watch out for these demand and supply areas, these key turnaround areas. These are then very, very significant support and resistance levels, and these can then be used for future trades, you know, or for whenever you move into these areas again. Okay, so I hope that video was useful. If it was, please smash the like button, and if you want to follow me on this TA journey, then please subscribe. Thanks a lot for watching, and see you in the next video. Bye.